Every parent wants to give their kids a head start financially. But between 529s, Roth IRAs, and UTMAs, it feels like you need a finance degree just to pick a piggy bank. Now there is a new one, Trump accounts, that are launching this summer 2026. The government gives $1,000 per kid born between 2025 and 2028, and you can contribute up to $5,000 a year. And if your employer offers it, they can contribute a part of that too. But the tax rules are confusing. They all say something slightly different. And honestly, I did not fully understand all of it until I sat down with two AI tools to help me figure this out. I'm not a financial advisor, and this is not a financial advice, but rather I want to show you how I use Perplexity and NotebookLM to help me do the research on this complex topic for my family. Perplexity searches the web and cites the exact sources, and NotebookLM reads all these sources and cross-references and identifies where these sources all agree, where they disagree, and if there is any key information that these sources are missing. One tool searches, the other tool thinks. Together, they help me figure this out. Let's see. Here I am in Perplexity.ai. Perplexity is an AI-based search engine. When you ask any question here, Perplexity searches the web in real time, and instead of just listing the sources, it reads through the sources, it synthesizes the information and presents to you the response in a summarized manner. And at any point, you can see where the information came from. You can click on the citations and it will take you to the source of the information. So if you're new to Perplexity, I would definitely suggest you to explore this. There are many questions on how is Perplexity different from ChatGPT, or how is it different from Google and all. If you click on this, it has always preloaded questions and you can learn more about it. Absolutely recommend checking out Perplexity. And I'll show you the power of it in this exercise itself. So let me put the question that we are here for. What are Trump accounts for kids? And give me a comprehensive overview. Who is eligible? What is the contribution limit, tax treatment, and when is it launching, etc. And I'm just using a free tier, so that's why I don't have access to all these models. But deep research is really good, which pulls in more sources, and also your responses are more detailed and granular. For this demo, we are seeing everything that is available for free. I'm just going to hit submit, and it's checking. As you can see, this was very, very fast. On the top, if you see, it's giving me an answer, which is the summarized, synthesized form. And if I click on links, these are all the links that it is looking at, Vanguard, so forth. This is our typical Google would do. Okay, let's go back to the answer mode. As you can see, it is just summarizing it in a nutshell. If I ask the same question to Google, it will just list me the links, and I have to go to each link and learn for myself. A Trump account, often called as Trump savings account, is a tax preferred account for minors, and it's intended to grow long term for broad future needs like college or start a business and so forth. And this account is for individuals under age 18. But the child has to be a citizen. The government gives $1,000 to kids who are born between 2025 and 2028. There are no income limits. Any family can open this account for their child. These accounts will become available 2020. $5,000 is the limit per year that you can have in this account. And who can contribute? Parents and guardians, the child themselves. If a child earns money, employers of the parent or of the child can contribute. In addition to that $5,000 limit, government makes this $1,000 contribution. Again, this is only for the kids who are born between 25 and 28. And this $1,000 does not count toward the $5,000 contribution limit. So this is on top of $5,000. That's a very good to know information. Employer can contribute maximum of $2,500. This is part of that $5,000. How is the tax being treated? This is what it gets very confusing. I know the policies are still getting regulated, so there is a confusion among many articles. If I scroll through it, in a nutshell, it's telling me what it is. Who are the eligible children, who can open, what the contribution is, what's the annual contribution limit. Again, you can go straight to the Vanguard and learn more about it. This is very helpful when you're researching from a very important topic. You always want to know where you're getting this information from the web. I'm going to ask a follow-up question. This is what makes it different from Google. In Google, you can't really you cannot just ask a follow-up question, right? If you ask again, it becomes a new search. So here I can ask a follow-up question just like a chat, right? It retains the context of what we were talking about. So I'm just going to say break down the tax treatment in detail. And some contributions are pre-tax, some are after tax. Help me understand what happens when I as an individual contribute to it after tax, and when if my employer contributes it. This is very good. Think of the account as having three main buckets, each with different tax treatment at withdrawal. After tax, individual contributions by family, friends, and grandparents. This is after tax. We have already paid tax on it and we are contributing the money. So at the time of the withdrawal, only the earnings should get taxed, but not the money in the account. Tax-free contribution. Employees, government, possibly qualifying non-government groups. When employers contribute, that is typically a pre-tax. So at the time of the withdrawal, it will get taxed. Then earnings. Each bucket has different going in and coming out rules. This is what gets very, very confusing. And what I understand is these policies and regulations are still under process. They may keep refining it. So there is no one final answer yet. So it says no withdrawals at all before they turn 18. Right? But after they turn 18, there is a portion of it that they can withdraw, and they can withdraw it for qualified reasons like buying a house, going to school. And then what happens if after 18 they don't go to school, or they don't buy a house, or they're not starting a business? What happens to the money? If you don't use it, it gets rolled over to your IRA, a retirement account. So, and then it follows the typical IRS guidelines. Here is a very good summarized. Family contributes it. So the basis amount that family contributed, we already paid tax on it. So the basis is tax-free. But any earnings on that money that we put in, that is subject to being taxed. And then employers is pre-tax. So the entire money gets taxed. And federal, that $1,000 seed that government gives is not taxable to you or your child when deposited, but that entire amount is subject to be taxable. It shows how this compares with the traditional IRA and 529. Unlike Roth IRA, there is no scenario where all qualified withdrawals are fully tax-free. Trump accounts always have some taxable component unless you withdraw only the basis. So it goes on to give you a summary of it. And here it even is thinking ahead of us. Hidden Trump account tax pitfalls like kiddie tax on growth and gifts. How is the kiddie tax applied to Trump account growth? These are really good questions. And I'm going to ask one final question. Is this something that I should be asking my HR department about? And notice I'm not giving any context. I'm just assuming that it remembers everything that we are talking about, just like a Claude ChatGPT, which remembers the follow-up questions. And let's see what it does. Is this something I should be asking my HR department about? So it's saying employee contributions and any pre-tax salary reduction options have to be set up through a formal employer Trump account contribution program under new tax code rules, often called Section 128. So without the program in place, you only have the family's side. Questions to ask your HR. Is our company planning to offer Trump account contributions for employees' children starting 2026? Employees are allowed, but they are not required, just like a 401k. So this is good to know, right? You should check with your employer if they are participating in this program or not. This starts to go live starting July 1st, 2026. And this is very nice. It's telling me how I would prioritize this as a parent. If your employer tends to offer 401k matches, HSAs, or 529, they're more likely to consider Trump account. So asking now may put it on their radar while they're still designing the 2026 benefits. So now that we have got a very good idea of what Trump accounts are, what are the contributions, who contributes it, what's the maximum limit to it, and what gets taxed, and what the withdrawal penalties are. So now let me take all this information and let's load it to NotebookLM and let's do the cross-reference there. So now that our research is complete from the Perplexity, I'm going to load all this information into NotebookLM. There are two ways I'm going to do that. One, I'm going to export this entire summarized response into a document and I'm going to upload it to NotebookLM. The other thing is I have all these links where it searched the Vanguard, White House, IRS and all. So those are the links that I saved and I'm going to add them as sources here. And why are we doing this? Because we are going to use NotebookLM to cross-reference the articles, where these articles align and where do they contradict. I'm giving a NotebookLM a name, Trump Investment Account for Children. Here, I'm going to copy the sources or the links that was searched by Perplexity. I saved all of them, and I'm going to link each one of them. Trump accounts. Next is the IRS. I'm adding Vanguard, Treasury. I'm adding various sources, not just all government, H&R, and YouTube source by it's a PBS News. So I added all the sources, document which Perplexity summarized. I've got that as a file. Okay, now that I added all these sources, to start with, NotebookLM gave me a summarized information. It's saying the government is introducing Trump accounts. It's a new federal initiative designed to establish long-term financial security for next generation of Americans. It's going to start in 2026, and every child who is born between a specific window is given $1,000. Otherwise, every child under 18 is eligible to have this account. And there's a contribution up to $5,000 annually, and where it gets compounded year over a year. And they can accumulate wealth for their major life milestones like going to school, buying a house, or starting a business. It just summarized it for us, and also you can see here it's helping us think about some of the questions. How do these accounts build financial security for American children? What's the investment strategy and tax advantage for these accounts? So it has some inbuilt questions that you can start exploring, research, or you can type your own questions. So I thought about it, and I have a master prompt I created. So I'm saying I'm researching this account. This is the eligible criteria. This is the contribution. Here are the investment rules. What are the details for withdrawals and transitions? And do a strategic comparison between 529, Roth IRA, UTMAs, and I'm just going to hit go. It's reviewing the content. It's defining what the investment goals are. It's outlining key points. I think the response is done. NotebookLM is very powerful. Here it's giving me a comprehensive breakdown of what Trump accounts are, right? Who qualifies, eligibility and seeding. There's a pilot program that they're running where they'll give $1,000 to the kids born between 25 and 28. And every child who is under 18 is eligible to have this. And there's a cap of $5,000 per child. Employer can match, but employees can also have a cap of maximum of $2,500. And investment rules, it's a growth period restriction, which means the years before the child turns 18, there are no distributions or withdrawals of any kind are allowed. So only after a child turns 18, they can withdraw this amount. If they don't withdraw this for specific causes like going to school or buying a house or starting a business, then there are penalties for taking that money. If they cannot withdraw for any of those three reasons, then all that gets rolled over into a traditional Roth IRA as your retirement account. This is very good. It's giving us a comparison of what the 529 and UTMA, the kiddie account versus Trump account. Right? Tax treatment. Trump accounts are completely tax deferred, which means we have to pay tax when the money becomes eligible. But 529, there is no additional tax. Parent or a custodian has the control. Okay, so far it was summarizing from all these sources, but I want to cross-reference it. So I'm going to say, where do these sources contradict, and are there any discrepancies in what they're talking? So let's check. This is what makes NotebookLM very powerful. It helps us do the cross-reference. It's saying here is the breakdown of where these sources contradict each other or offer different information. For withdrawal rules at age 18. For example, the PBS NewsHour explicitly says that at age 18, kids can use up to 25% of this to buy a home, start a business, or go to college. Or if withdrawn for any other reason, it's subject to stiff penalties. But there's no 25% cap mentioned anywhere in H&R or Vanguard. Right? They broadly state that at age 18, the account becomes subject to a normal withdrawal per IRS rules. And see how they differ. If I just go by a news channel, I may think 25% of it is tax-free. but nowhere in IRS or anywhere it mentions. Okay, I'm going to ask another question. What are the practical steps I need to take now to open these accounts? What forms should I be filing? And where should I file? And what should I do before July to be ready? To be fully prepared before the contribution launch happens on July 4th, here are the practical steps that you should take. Confirm the eligibility. Make sure you have a child under 18. Check if there are any children which are born between 25 and 28. And how do you get this $1,000? You need to opt in through the tax form. And at the time of filing tax, you need to filling this additional form 4547. And then you can talk to your own financial brokerage firm and shop around between Vanguard, Fidelity, Schwab, and compare the fees and any other expenses that you may have. And coordinate with your employer. Check if they also contribute, and plan your own funding. Decide how much you want to contribute. Give me the list of questions I should take to my brokerage or financial advisor. Okay, let's sum it up by this. Will you be offering these Trump accounts? How do you coordinate with the IRS for the Form 4547 election? How does the custodial arrangements work? Confirm that you will be listed as a sole custodian and your child as the beneficiary until they turn 18. What eligible investments do you offer? What are the exact fees? Since the government mandates these investments to be low cost, ask the advisor for a breakdown of the expense ratios. This is very good. I would have missed this. How do we handle employer matching? If your employer offers $2,500, ask how the brokerage process use these direct payroll contributions and how they distinguish from my personal contributions. How are different types of contributions tracked? How can we prevent excess contributions? Who maintains this cap? How does government know that we have exceeded 5,000? So how do we prevent this any excess contribution? Long-term planning. What happens exactly when my child turns 18? How does this interact with other accounts? This is excellent, right? Now I feel confident. I know what the research was based on. I know which documents we read through. I have the questions that I can take to my financial advisor. Now I feel prepared to make smart decisions for my family. Again, quick disclaimer, this is not a financial advice. Always talk to a professional before making financial decisions for your family. And here's what just happened. Perplexity searched through the web and found the best sources from IRS, White House, Fidelity, with citations that I could actually click and verify the truth of the source. 4 rounds of deep research. And NotebookLM read all these sources together and found the areas where they all agreed and where they contradicted. It also helped me identify the questions that I should be asking my financial advisor. One tool searched, the other thought. Together, they helped me research this complex topic under 30 minutes, which would have taken me hours going through these articles and reading and making my own notes. This is what most people miss about AI. They use one tool and find it useful. But when you start using multiple tools together, that's the superpower. Both tools are free. Links are in the description. Do your own research. Bye.